Good morning, investors and traders. In today's segment, we'll be looking at Forex and gold ahead of Jackson Hole event. And of course, we will talk about the US GDP number as well. Now, if you haven't subscribed to our channel, I highly recommend you to do so. Let me bring out this disclaimer. If you have any questions, please feel free to ask me as always. Now, let's look at the MT4 platform. Before we begin, very briefly about myself, I come with a wealth of 15 years of trading experience. During this time period, I worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst to Trade. Now, the most important event for this week is taking place today, and that is the Jackson Hole event. During this event, the Federal Reserve is likely to provide us clues about their monetary policy, the path that where they would be taking in relation to their loose monetary policy, and at the same time we may get some clues how the Federal Reserve is thinking about the monetary policy on top of the economic health of the United States. Now, of course, their view matters a lot. If they sound that yes, recovery is very strong, market is likely to take that as a bullish sign, and under those circumstances, currencies like GBP USD, sterling dollar, in other words, is likely to face a sell-off. And the same thing can happen in gold prices as well. And if the Federal Reserve thinks that, look, Delta is still a major concern and we are in no rush to start tapering our monetary policy, we could see the dollar index falling on the back of that. And that means the sterling dollar pair, which is right in front of you, could see a massive momentum to the upside, and of course we could see the gold prices moving to the upside as well. Now, let's have a look at from the technical price perspective, given the fact that we have covered the grounds in relation to what to expect in with respect to the Jackson Hole event. But remember, that is not the only event which is taking place, because at 1:30 today we are going to get the US GDP numbers as well, and that number again is going to bring enormous amount of volatility for stock indices, for forex, and of course for cryptos, for commodities as well, for indices. So if the number comes in strong, we could see the dollar index moving higher, i.e., gold prices dropping, and for stock indices could actually move to the upside because traders will see that as more economic strength coming in, which could be really sort of a great thing for the stock indices or for the US economy as well. Now, let's look at the sterling dollar pair first of all. Now, on the daily time frame, what we really see is that we see the double bottom sort of forming. So we have the first bottom over here, we have the second bottom forming over here, and now after that the price sort of moved to the upside. Now, in terms of the three indices, we have our 50-day simple moving average, then we have our 100-day simple moving average, and finally your 200-day simple moving average. Now, yes, the price has formed a bullish pattern. Yes, the price is moving to the upside, but we still need the price or the bulls to take out this downward trend line, which has been there since 23rd of May, because only once we break above this downward trend line in terms of a sterling dollar, then we can say that yes, now the downward trend is fully over, and then the prices are likely to move towards the previous resistance, which is going to be right over here. This should be an arrow, just consider as an arrow line. So that would be really around that 1.42 sort of a price level in terms of sterling. Now, what about euro dollar? Because euro dollar is also likely to face higher volatility today on the back of this one. Now, just like sterling dollar, traders over here also need to break above this downward trend line, and on top of that, that 50-day simple moving average. Over here, we certainly do not have a double bottom, because the previous bottom, which was formed over here, and the current bottom, which is formed over here, is certainly much lower, and that indicates weakness in terms of a price action. Now, we may get a breakout of this downward trend line today, but the resistance levels, the sort of resistance level in terms of euro dollar, the first one is at 1.19, and then the second one is just right over here. So the price may break up out of this particular downward trend line, but it may struggle to break above these particular price levels, this particular resistance zone, and that is that we gotta be keeping a very close eye. But overall, if we look at the price momentum, the momentum is certainly looking very positive, because the RSI has moved away from the oversold area, and now it is maintaining its momentum. So in terms of a sterling dollar or euro dollar certainly looks like a pair which could see a more momentum to the upside today than anything else. Now, let's talk about gold price, how gold price is performing, and then what is likely to happen over here. Now, when we look at the gold price, the first thing which comes to our mind by looking at the chart is this sort of a pattern, the bullish pattern. So we have a shoulder, we have our head, and we have our right shoulder forming over here. Perhaps it is not the best reverse head and shoulder pattern that we will see, but it is there. So I kind of wanted to point that out to you guys. Now, in terms of struggle, the price is more focused on the 50, 100, and 200 simple moving average. What we really need here is the price breaking and taking out all of these resistance levels, i.e. your 50 and your 100, 200 and your 100 simple moving average. Once we have gone above these particular price levels, then we are likely to see more momentum. If the price fails to break above these particular price levels, then the only way for the price is to move again back towards the previous support zone of 1749 to 1761, and we could see the price moving towards these particular price levels very easily today on the back of the GDP data, on the back of the Jackson Hole event. So expect large amount of volatility coming in today. That's all for now. See you guys next time.